Okay, I'm very excited to have on the Goldstein on Geld show, Wendy and Eric Nissan, who run a company called the DIY.FUND, which is, well, as they say, it's supposed to help individuals manage their own money. The question, Wendy and Eric, that I have for you is, why is it so difficult for people to manage their own money?
Hey, Doug. Nice to be on the show.
Thank you.
Glad to have you.
There's a slew of reasons, people getting started. There's, noise from all over the place. I think inherently the advice that individuals get is biased towards the person who's giving it and not necessarily in their best interest. And individuals wind up suffering, spending a lot of years trying to discover what it means to actually invest. And in those early years, instead of actually earning a reasonable return, a lot of time gets wasted and, trying a lot of different things. And so, really cutting to the core of what investing is and how to get there quickly is really to the benefit of the individual.
And I think what happens, though, is that individuals get sucked into the gamification of the stock market and of investing, which isn't really investing, but trading. And I think they lose sight of what the long-term goal should be, is to actually maximize your return.
So you think that trading is kind of the bane of the existence of a new investor?
It can be. I mean, it depends on your personality, but I think a lot of people go into it thinking it's a sexy thing. You're hearing Wall Street and hedge funds and, the first thing you do when you sign into your broker, you get these charts and things are blinking at you. And then off to the right is the option trading button, not to say that everyone goes down those avenues, but it's out there and you're being taught that those are proper investing tools for the individual. Whereas, looking at your portfolio holistically, trying to manage a portfolio, in that vein is really like in the back order of things to do when you open up your account.
But a professional, that's the first thing that they're doing. They're looking at your portfolio, seeing how well balanced you are, getting you properly allocated, setting time horizons. Not nothing, but most individuals don't go through that thought process.
Yeah, I think the flashing lights is a very good metaphor. It just catches your eye. And it turns out, I think that the companies make a lot more money maybe when people are trading rather than when someone puts together a financial plan or an asset allocation model. It's very much that people are drawn towards the trees instead of the forest, which I guess is the big mistake, but it kind of happens everywhere, especially these days where there are plenty of distractions that keep people focused on little things instead of big pictures.
No, exactly. And that goes to my first point of who's the advice you're getting or the screen you're getting, whose benefit is that of? Is it for your benefit or is it for the broker who's trying to get you to actively trade or the guy on TV trying to sell you something? But really, what is your benefit and how do you take away that noise as a new investor and really just cut to the chase? And that becomes a challenge. And the software that you're given is geared to those things. You're pushed down this path and you have no way to know are other people making money? Everyone's so quick to gloat about how much money they're making and how easy it is. And so you start thinking that, well, it should be easy for me to do it. In the meantime, you're not going down a proper path. It takes a while to get there.
Don't you always hear about people's winners? How often do you hear about their big losers, right?
Mm-hmm. Yeah. Now, no one wants to share with you. The problem is funny because as an investment advisor, I'll sometimes sit with clients and I, of course, maintain absolute confidentiality, but clients will say whatever they want. And it's sometimes funny. They'll say, Doug, I want to buy this stock. My doctor owns the stock
Exactly.
and he's doing great. And I happen to know that doctor because he's my client too. And he's like, doctors notoriously, and I apologize to all the doctors out there, are like the worst traders out there. They only invest in one sector of the market, which is pharmaceuticals. And as often as they're right, or more often than they're right, they're wrong. But they do only, just like everyone, they only talk about their winners. But, the idea that you're bringing up is to focus on goals and goal setting. But let's face it, that is boring, right? Who wants to talk about when you're 30 years old? Who really wants to talk about planning for 30 years down the line?
Yeah. And it's also, how do you organize your portfolio? The trick is too, the focus is on, I'm going to find that winner stock. And that really shouldn't be the focus. The focus should be on, what do I want to invest in? What are the parameters around what I want to do? And then you can go and spend time finding that stock or those stocks and how do they fit all together and having strategies. And, the irony of it is it doesn't sound as sexy, but it isn't as boring as you think. I think there is, if I was at a hedge fund and most of what they did to produce returns was to manage a portfolio like this. And there's interesting calculations and numbers to look around there, but we're not told that as individuals. The irony is when you get your account, you're told you can trade options and chart and do all this stuff. And that's fine for individuals, but manage a portfolio and to rebalance. No, that's too hard. Let's send you to a professional, do it. But the irony of it is that the easier thing to do and the more worthwhile thing to do is to manage your accounts more holistically. And
if you honestly look at the S&P 500 has returned on average, close to 10% over the last 20 years. If I could lock in 10% today, I think a lot of people would probably do that. So if you're looking at where do you want to be 20, 30, 40 years down the line, being invested and being invested properly is the best way to go about getting that positive return.
We're talking with Wendy and Eric Nissan, who help investors manage their own money at DIY.FUND. And we've been talking about some of the more difficult aspects of managing your own money. And it seems that one of the most difficult things is just being relaxed and setting goals. But tell me something. You mentioned the S&P 500. It's truly a volatile kind of investment and index. How do you reassure investors about volatile markets?
So first of all, you do have to understand risk and the nature of risk and return. And I think that piece of the conversation also lacks for individuals. They think that, the return can come without the essence of the risk attached to it. And understanding that the more risk you're going to take, you're going to have that more upside and potential downside. And so understanding what your risk levels are.
Wait, so hold on one second. You're using a term that I use all the time, but I think that it often falls on deaf ears.
Yep.
When you say understand the risk, what is risk? What is there to understand about risk? How do you tell a client? You say, listen, Mr. Smith, you're putting in $100,000 into this, but it's risky. And, they only hear Wendy said you make 10% on the S&P 500.
Yeah, she did say that. So
but past performance is no guarantee of future returns, right, Wendy?
Yes, for sure.
There you go. Okay, we just have to say that. No, but seriously, how do you tell someone that?
The way I phrase it is there's no free ride in life, right? And so everything you do you have to give something to get something. And so if you want to earn 20% returns this year, you're going to have to accept the fact that you could lose 20% in returns this year or more. Or if you're willing to say, you know what, I don't want that type of risk. I only want to earn 1 or 2% this year. Okay, well then maybe the fee for that should be maybe I should be able to risk 5%, max. So depending on what your return is should be comparable to the risk you're taking. And a lot of time we see investors who are taking too much risk and not getting that return out of it. And that's where the true travesty of individual investing comes.
Travesty. I like that. No, it's a real problem. I think what you're saying, I think one of the other things that I would focus on more also is, again, I think investment professionals look at things differently. And when we talk about a percentage up or down, it means one thing. But for an individual investor, I'll often say to someone when I'm having this discussion, I'll say, listen, you want to put $100,000 into the market. What would you do if next month your statement was worth $70,000? Because I think people hear numbers, they go, that's a car, that's a Nissan.
Right.
As it were.
No, but that's literally we really try to put things in their frame of reference because 100 to 70 is a very different prospect than, down X%.
Mm-hmm. Yeah. No, I definitely think you need to have those numbers. All right. So let's say someone's listening to the show and he or she says, this is a good idea. I should be investing, or let's say I just got an inheritance and I need to get started with it. What's the number, literally the first thing that they should do?
So you're talking about someone who's never invested before. Is that
right. Gets a windfall.
Yeah. So I think, first of all, I'm not against getting a professional in that situation if you feel like you need someone to help you get your foot started. But on your own as well, you can dip your toes in, understand, there is something to be said for understanding putting actual money to work and seeing what happens in the market. And that is a learning experience in itself. And, you don't necessarily have to go all in, but just going that first footstep in is the way to then understand, well, I was down, I was up, and overall I saw the path of the market. And I get.
You mean with real money, by the way, or one of these, games where you get
I don't think the game
paper money.
I think learning how to actually execute a trade, hitting buy, seeing what happens to your account, getting over the fear. I think there's a big fear that the investment professionals know something that no one else knows. I'll never learn it. I never learned it in school. I can't do it. I'm not qualified. And when you actually start, making those steps to actually place a trade, see what happens in your portfolio, you realize that, that big hurdle is released once you've actually done a little bit yourself.
Uh-huh. So I hear it. That's actually an interesting motto, and I tend to agree with you, because I think that when people play these stock market games, it has nothing to do with their own reality, and there is no tolerance for risk because you're not really losing money. It's just on paper, and therefore a lot of people may take much bigger risks and actually may make a lot of money on paper. Then they think they're really smart, and the moment they go in with real money, that changes everything.
And that's honestly, even there's my kids' school, they were doing a stock market game, and it frustrated me. I said, this is the last thing they should be doing. This is the worst lesson you should be teaching, 5th grade kids. They're going all in. The person that won threw darts, and risked all the way to the moon. That's not real life.
The other problem with the game is that, you could put the money in, you're not checking it every day, whether you won or lost. You're not, you don't really learn out of it what you will when it's your real money and, you have something at stake involved. So they're just really two different concepts.
All right. You got to put your money where your mouth is. Guys, there's actually a huge amount of information. I know that you share a lot of it for free. Unfortunately, we're not going to be able to share more of it on today's show because we're out of time. But in the last few seconds, just tell me, how can people follow you and follow your work?
Yeah, our website is www.DIY.FUND. Without a com at the end. So DIY.fund. We have a blog at blog.DIY.fund with the link there. And our Twitter handle is at DIY.FUND. So plenty of resources. You can sign up for our application and learn how our investing process works. It's free. And so we encourage comments and all sorts of ways for individuals to grow as investors.
Okay, we will put links at the show notes of today's show at goldsteinongelt.com. Wendy, Eric, thanks so much for taking the time.
Hey, really, thanks for having us.
Thanks so much.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.